Wednesday morning. Welcome to SquawkAlley. With me for the hour, David Faber, Mike Santoli here at Post 9. Carl Quintanilla is on assignment in Rio at the Olympics. And also joining us this morning out west, Inside.com founder and CEO Jason Calacanis. Our top story this morning, Hewlett-Packard Enterprise CEO Meg Whitman doubling down on comments she first made on CNBC regarding Republican presidential candidate Donald Trump. Here's a clip from that interview back in March.
I don't think that a Trump presidency would be good for our business, and I'm exactly where I was 3 months ago. I am not supporting Donald Trump, and under no circumstances will I support Donald Trump. I think his policies around free trade will be damaging to business as a whole.
Let's get to John Harwood in Washington, D.C. with the latest on that. John.
Well, it's a difficult time in the Donald Trump campaign, but let me start with some good news, which they just put out this morning. Donald Trump's campaign announced that they raised, between their efforts and the Republican National Committee, $80 million in the month of July. Now, that's not as much as the $100 million that Mitt Romney raised 4 years ago, but it's not bad. $10 million behind the Hillary Clinton and Democratic National Committee effort. Donald Trump needs to catch up, and he made some progress. Earlier, he had made a reference to raising $35 million, and people had thought he had not kept pace at all with Hillary Clinton. These numbers are healthier. On the other hand, politically, he's falling behind in the polls, and he's facing rising defections. Meg Whitman put out a statement to the New York Times yesterday saying that not only would she not support Trump, that she was going to raise money and talk to other Republicans about supporting Hillary Clinton in the campaign. That is an indication of how fractured the Republican Party is right now. And I just got off the phone a while ago with Vin Weber, who was a prominent House Republican, ally of Newt Gingrich, ally of Ronald Reagan, who said that it would be a mistake of historic proportions for the Republican Party to stay behind Donald Trump, said he is going to not vote for Trump, that markets would collapse if Donald Trump and his protectionist policies were implemented. Again, more evidence of troubled waters within the Republican Party, and Donald Trump's got to figure out whether he can calm them down. Guys?
And something you first reported on, John, last night, followed by many. We'll watch to see how the morale within the Trump campaign develops. For now, thank you, John. Let's get right to our panel. Jason Calacanis, your take on Meg Whitman's comments. They're not necessarily new, but it's being called the highest profile defection within the Republican Party.
Well, it's completely logical to vote for Hillary Clinton if you're a Republican, because she's much closer to GOP positions than Donald Trump is. Donald Trump's position is pretty hard to nail down. He's a unique snowflake, and his positions against globalization and free trade are very, very scary to anybody who's in business, because 2/3 of revenue from many of the companies I'm involved with comes from overseas. So it's terrorizing to think of Donald Trump being president and what it could do to technology companies and companies that trade outside of the United States. Now, of course, the idea that you would go against your party is also just completely not happened in our lifetime. So this is unprecedented territory. But again, Trump is a very unique candidate in that regard. And there's a good chance he could win. I mean, the fact that he's raised so much money, even though he's behind in the polls a little bit right now, should be a big warning sign to people who are scared about his presidency.
Well, and this year, of course, many states in the United States are going to be contested, David, that have not been contested before. California is not one of them, but Meg Whitman's net worth, roughly $2 billion. How much of that is she willing to part with, do you think?
I don't think a lot, but and listen, to be fair, as we've said, she came out originally, of course, in support of Christie when he was a candidate for the nominee for the Republican Party. But then when he threw his support to Trump, she dramatically at that point parted ways with both Christie and Trump, and was very critical of Trump at that time. So it's sort of been an evolution. Finally, she's getting around now to saying she would vote for Hillary Clinton. It's not clear to me how much money she would contribute herself, but certainly she's an important voice and one who conceivably could galvanize others to potentially support and contribute.
Her political record is mixed, though, Mike. I mean, she has tons of business acumen, but how much political savvy is she bringing to the table?
Well, I don't know that she's necessarily trying to lend her kind of political know-how to this effort. Is really just to make a stand on what she sees as principle. I do think there's another wrinkle to it besides the pure business concerns for a lot of these senior tech executives. And we saw this with Intel when they tried to have a fundraiser at some point. Their workforces, their employees are among the most international in any industry. And it's just not great for your own kind of employee relations necessarily to be seen as backing somebody who is against globalization, against immigration.
Yeah, well, we continue to see people within the Republican Party stand alone in this election. We'll see if there are more. Meanwhile, shares of TimeWarner today moving higher. The company agreeing to buy a 10% stake in video streaming service Hulu. The stake is reportedly valued at $583 million. TimeWarner joins Disney, 21st Century Fox, and our parent company Comcast as owners of the streaming service. TimeWarner also reporting some mixed results for the latest quarter, but it did raise its full-year profit guidance. That is among the factors raising the stock about 4% today. Jason, it was last year that we were proclaiming the death of linear TV. TimeWarner seems to buck the trend there, at least today.
Yeah, I mean, listen, there's three areas where live TV is super relevant. Obviously, news, here we are. Sports, obviously a huge category. And, you know, this real-time reality TV that unfolds weekly. Those are very strong categories. And live is pretty exciting on these new platforms like Facebook and Twitter. So it's interesting. TimeWarner is taking 10%. It's a $5 billion valuation. Sling is really the only other OTT product out there of note, and that's got under 1 million subs, I believe. And it's a pretty horrible product. So I think it's going to be a nice boost for Hulu to have this, you know, over-the-top service and be able to watch live TV if you're into the NBA, getting TNT, et cetera. But I think linear TV has won the day. You know, this binge watching is really what millennials and even, you know, Gen Xers seem to be drawn to. But I wouldn't be surprised if in 3, 4, 5 years from now we'll be on this network talking about Facebook, Google, YouTube, even Twitter, not just having the live rights to clips, but to having the ability to carry things like CNN or CNBC or even full NBA games. That's where this is headed. Because the monetization on those networks will be even better because they have all the data about users.
Right. It was just a few years ago, though, that Hulu only had a $2 billion valuation when Providence Equity sold its stake. $5.8 billion is quite a jump from there.
It is. Their subscriber rolls have jumped also. But I think most importantly is what this streaming service that they're going to introduce next year is going to look like with the addition of these networks from Turner, from Time Warner. I mean, it could be a fairly robust proposition. And we've been watching, of course, very closely when we talk about cord cutting or cord shaving. What are the real opportunities going to be for offering people something that they say, okay, I'm willing to get rid of my cable because I feel like my needs are being met, and at what price point? We still don't know, but Hulu is putting together what could be a fairly compelling set of content, and certainly I think that's an important part of the story. And by the way, on Time Warner overall, the numbers were good across the board there, so it wasn't necessarily mixed. It was strong, and guidance was strong.
Revenues were a slight miss.
Yeah, maybe. I mean,
it's mostly foreign exchange, I think. And just also, to your point, David, and how many services will you then end up with if you're willing to cut the cord, right? So that's the idea of having one solution, which used to be the Netflix idea, that's going to replace everything. It really isn't a one-for-one. It's kind of a pick and choose. And
when Mr. Bucas is asked about over the top, he tries to focus on demand, which is something that they've invested very heavily in.
Right, particularly in HBO. Yes.
One other story we've been watching all week, Uber selling its Chinese operations to rival Didi, raising Didi's valuation to around $35 billion. The deal has raised questions, though, about how hard it actually is for U.S. firms to compete successfully in the world's second biggest economy. Jason, we've talked about Uber for months in China as a situation that is singularly different. But if you are Facebook or Netflix or other companies that want to enter China, what lessons do you take away?
Yeah, so full disclosure, people know I was an investor in the first round of Uber when it was a $5 million company, so I have a horse in this race. It's absolutely fantastic to see this move because as a shareholder, a significant shareholder, you know, it's very disconcerting to watch two competitors in a major market where you don't really have an advantage, like China, a very challenged market for American companies. To watch two companies go head-to-head and lose billions of dollars, it's quite disconcerting. As a matter of fact, it was really the only critique any logical person could have of Uber as a business. Now we've taken what was the one critique I ever heard from intelligent people of Uber's future, and you've took $2 billion in investment and turned it into a $7 billion stake and a $1 billion investment. So it's an absolutely fantastic, I think, outcome for Uber to create $5 billion in value and get out of, a dogfight that could result in a web van or Cosmo-like, loss. So I'm absolutely thrilled with this outcome.
Is it an admission of defeat, though, Jason?
I think it's the silver medal. And you know what? For a company like Google or for a company like Uber or Facebook, winning in China, if you get the silver medal is pretty great. It's not like you see Facebook or Google having any presence in China, zero. So to have 20% of one of the major companies there in the same way Yahoo had a big stake in Alibaba, I think that's as good as it gets for an American company in China today. So is it defeat or is it the biggest success we've ever seen in the history of an American company operating in China? I think it's the latter.
Jason, is it the one critique you could have of Uber? Is there losses potentially in China, or at least a challenge being how are they going to deal with the economics of drivers, making it attractive here? And we also saw some pretty good usage numbers out of Lyft.
Yeah, so if you look at the driver marketplace, any driver can switch from one service to another, and including other services like delivery services, whether it's Google Shopping Express, Instacart, or Bento, or any of these services, Sprig. So, the drivers are going to go where they get the best deal and they have the most customers and the most business, and drivers are voting to be with Uber. So I think that's a complete non-issue. It's a completely fluid market. Many times you get in an Uber and you see a Lyft, logo in the window as well. The drivers are going to make the best economic decision for themselves, and Uber has consistently provided the best economic return. So I'm not worried about that at all. And, I think Uber is maturing as a company massively and quickly and becoming very profitable in a lot of the cities. I don't have inside information or a ton of inside information, but I can tell you that, profitability is the rallying cry, and Travis is one of the 5 best CEOs on the planet right now. He's executing at an absolutely extraordinary level, and he's learning a lot. To go into China just 2 or 3 years ago and create this much value in such a short period of time is extraordinary. So I'm thrilled as an investor.
Well, you could also argue that putting up a fight at that cost in China is something only a private company would do. A public company, shareholders would never let them do that. But perhaps a conversation for another day. Jason, it's always great to get your thoughts.
Thanks, Kayla. It's great to be here.
Jason Calacanis from Inside.com.